In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement. I'm your host, Rick Everett with Market Advisory Group. And with us in this episode is Matt Goolsby, Managing Partner and Lead Advisor with Market Advisory Group, as well as Joshua Cicora, Lead CPA with Market Tax Services. Bill Vawter is with Market Medicare Advisors, and Gerald Eidelman, the estate attorney with Eidelman Law Firm. Matt, you're a financial advisor with Market Advisory Group. Who exactly do you serve?
Well, we will work with just about anyone that wants to come in, but the ideal person that we're out there helping is someone either nearing retirement, 4 or 5 years, they plan to be retiring, want to start looking at some planning, or maybe just entering retirement, or just recently entered retirement. We call that in our book the retirement red zone, 5 years before you retire, 5 years typically after. And when we're working with these people, they often find out, I've never retired before. And they have these questions that they had no idea that they should be asking, or maybe who they should be talking to. And because of the team here with the estate planning component, the Medicare advisors, the CPAs and the tax advisors, we help them with a complete plan and start a better retirement that way. Case in point, had a couple that were nearing retirement. They also had a 16-year-old son at home. They thought they were just going to take Social Security when they were 70. It's like, that was the way they were going to maximize their Social Security. But they hadn't given any thought to tax considerations, let alone on the taxation of their Social Security. They also hadn't given any considerations to the taxation on a pension they had as well, and then the IRAs that they'd never had the taxes paid on. So that had not even dawned on them. But through the course of a conversation with them, because they had the 16-year-old at home, if one of them were receiving Social Security benefits, the 16-year-old would be receiving up to half of their Social Security benefit. So it changed the paradigm. It changed the maybe parameters that they were looking at just on when to start Social Security. Now, I mentioned they'd only saved in retirement accounts like IRAs and 401ks, and they were concerned about increasing taxes in the future. So we met with our CPA, Joshua Cicora. He helped me with that. And then, of course, they weren't quite 65 yet, so they had Medicare questions, and I couldn't answer them. Medicare is its own can of worms. So we brought in Bill as well. But the whole team here, we have a process, and we take people through that process to make sure they're getting all their needs addressed and all the questions answered in that moment, and not having to refer them down the street to some other advisor where maybe they're not familiar with the lingo or how to communicate or relay all the details that are going on in their plan.
Bill, in this scenario that played out, what was Market Medicare Advisors' role in helping with this plan?
Well, actually for me, they came in, I would consider it a little bit early. They were about a year ahead of time before they were going to reach Medicare, but they were concerned about that. They wanted to know, what's this transitionary process like? And so I kind of walked the broad view with it and explained to them the timing when they really needed to come back so I could go into more detail to be more specific about what their choices would be. Also explained to them that, we help people enroll in Medicare. We help them enroll in Social Security. They don't have to go anywhere to do that. They can come to us for that. And I explained the timeline, the forms that I would be giving them to fill out with their employer to bring back to me to get them onto Medicare. And I kind of summarized it there.
Joshua, tax implications in this scenario?
Quite a few tax implications, right? So when we have conversations like this with this couple, one of the first questions we ask is, do you think taxes are going up in the future? 95% of the time people agree taxes will be going up. And so then with the fact that they were looking at turning on Social Security at 70, and then all of their savings were in pre-tax accounts, we knew at 72 they were going to start having a jump in their income that they really hadn't even planned in. So they had a couple years where income was going to be down, and they would get used to the taxes being down, and then 72, wham, here comes Uncle Sam with a big old tax bill.
Now, we anticipate tax implications, and Bill, it sounds as if you met with them prior to the actual retirement planning in full took place. But I haven't yet heard anything, Gerald, about an estate plan. There was no estate plan in place?
No, there was no estate plan in place, and that's part of the discussion that we had at the first meeting. Is like, okay, what are we trying to accomplish, and what we can do to find out and figure out how to meet those goals. This was a complicated situation because you had a minor child. This was not their child, they had adopted it, and so that's why they're different in ages. And they needed to be able to have something to protect the child's inheritance, especially since, even if they didn't die today, they could die soon enough that he would be very young and unable to handle their finances. So we put together a trust where the money would be protected for the son, and it would prevent creditors, judgment, and other people who could abuse, and himself, from making a mistake and being able to take care of until he grew up enough.
Matt, with the box store advisors that are on every street corner, they're not supposed to be giving tax advice. They're not supposed to be giving Medicare guidance or estate planning advice. Why would somebody pay more for incomplete advice?
We find often when that dawns on people, they have that realization as well. It's like, well, why am I paying my financial advisor if he can't help me with my tax plan? I mean, when I take a withdrawal, that's going to cause taxes. If this IRA or 401k has never had the taxes paid on them, then that can impact the taxation on your Social Security. It can impact your regular ordinary income taxes. It can impact capital gains rates. I can talk about all these things. My compliance officer, because I have a license with the SEC for I'm a registered investment advisor. Investment advisor representative. So, but Joshua is the tax professional that helps us with those questions. And oftentimes, when we're in the moment there, do I need to have any extra withholding? How will this withdrawal impact the taxation on my Social Security? Future RMDs. This couple had $2 million in IRAs, and they had not looked at taking any of that money and converting it to tax-free status. That's what with the help of Joshua and his team, we did.
Joshua, would you say this is a pretty typical example of the entire team coming together for the common cause of helping an individual?
Yeah, this is something we do pretty routinely. And we often get people who, when they come in the door, they've gotten bits and pieces of advice from other places. But then when we start to kind of unpack it and explore it a little bit more, they realize that the financial advisor they've been getting this tax advice from may not be current on how taxes have changed over the last few years, may have had some misconceptions in there that can cost them in the long run.
Matt, the whole team under one roof, that's a huge value to the clients, I would have to imagine.
When they see this process in motion, when they see us collaborating and working together and coordinating on their benefit for their behalf, it's a no-brainer.
If you'd like to experience the holistic approach to retirement offered through Market Advisory Group, please, our operators are standing by right now for a complimentary, no obligation consultation with you. The number to call is 316-252-8707. Again, 316-252-8707. We'll be back with more Eye on Retirement right after this.
When people work with Market Advisory Group, they get a feel of sense of family. There's a lot of relationships that are made and going on in this conference room, and we really take a lot of pride in that and a lot of satisfaction in that.
Every client we work with, we make a custom-made plan to fit them and help reach their goals in life. And then another thing that makes us unique is We want to meet quarterly with our clients and have reviews.
Market Advisory Group, we have a process, and the process we take people through is first to understand what they have, understand who they are, and then we put together an income plan for them and show them how they can look forward to retirement and not look, though retirement is going to be a stressful time. It needs to be a stress-free time.
A few unique features of working with Market Advisory Group is holistic in-house financial consultants. We've got an in-house CPA, Joshua, an in-house estate planning attorney, Gerald, an in-house Medicare advisor, Bill. We rely on all of those professionals for, again, additional service within our consultative process, making sure that we've got the advice and the expertise behind the recommendations that we make.
You know, as an advisor, I'm not there to sell them one way or the other. I'm there to educate them, to let them know what their choices are. Then I try to help them make the right choice where they can save money and feel confident in their decision.
Absolutely, the best part of my job is getting a stack of paperwork from somebody and they don't know what to do, and then I can turn around and give them back a tax return, but also to be able to explain what they can do next year that will give them a better answer than what they had this year.
When we've got clients that are calling and they need to help out a child or need to help out a grandchild or need to help themselves out and they're in a situation they didn't expect to be in, I really relish the opportunity to help them through that, help them make the educated decisions in somewhat stressful situations, because a lot of folks don't have that type of counsel.
We meet with so many people one-on-one in this office that don't ever end up becoming a customer or doing business with us, and that's okay. But when they leave our office, we know that we've helped them either get some answers to some of the questions they had or get some clarity on maybe their own path.
But one of the things that we hear all the time is, I wish I would have met you guys 10 years ago, because how much further could I be down the road? Well, Johnny Appleseed said, when's the best time to plant a tree? 10 years ago. When's the second best time? Today. And so if we can help people today going forward, that just brings an incredible amount of comfort and excitement for us to come to work every day.
Hi, and welcome back into Eye on Retirement, the weekly show that keeps you in the know about all things retirement. I'm Rick Everett of Market Advisory Group, along with Matt Goolsby, Managing Partner and Investment Advisor with Market Advisory Group. Matt, a couple of things that we all can echo in on as far as being truth. We all love to pay taxes, and we all believe that taxes are going to go down in the future.
Yeah.
You had a scenario when a person came into your office recently and tax implications were going to be huge had they not been intervened upon by Market Tax Services and your group. Share with us a little bit about that story.
Yeah, recently met with a lady that was recently divorced, and now she's the chief investment officer now of her household. She had half the investments split because of what's called a quadro, which splits that out to where she gets her half of the nest egg, so to speak. And now she was having some tax implications happening. And she came to actually one of our tax classes, and she said, Matt, I have all these tax questions. I said, well, we need to talk with one of my CPAs about this in more detail. But turns out she had a actively traded account that was not in retirement accounts, which was causing a lot of tax headaches, and she didn't know what she could do with that, let alone she didn't know what questions to ask and of whom to ask them. Now, she heard from a friend she needed a trust, and that was going to be something we'd set aside for a little bit, another conversation here with our estate planning attorney, and because really, a lot of people will hear that they need one, and that might not necessarily be the case. So did she really need that? And then her financial advisor, like I said, was actively trading the account, creating all these taxable implications here. It's not necessarily a bad thing when you're trying to avoid the volatility of all this crazy market movement we've got from the Federal Reserve looking to raise rates, the geopolitical issues that are out there right now. But it caused a lot of tax implications for her, and there was probably just maybe a better way to do that. And enter in one of our CPAs, Joshua Cicora here, and we discussed a more tax efficient way.
Yeah, so when we have that active trading going on, that's fine if it's in a retirement-oriented account because all those gains are deferred until they start taking the cash out. But in this type of account where it's not retirement oriented, then as those trades were occurring, that was causing taxable gains. And because they were happening routinely, they were short term, which is even worse because it's taxed like your regular income. So what we needed to do is explore a way to have those funds still invested in the market, still gaining, still growing for their retirement nest egg, but at the same time defer those gains, the taxation on those gains, until she was ready to draw that money out. Because she's taking the money out, she's getting the cash, well then that's a better time to have to pay the taxes because at least you have the cash in hand.
Bill Vawter is with Market Medicare Advisors. And Bill, how did Medicare planning come into play in this scenario?
Well, in her case, she had a particular doctor that, as she went on to Medicare, she wanted to make sure that that doctor was covered by whatever health insurance that she went with Medicare. But she also had a particular handful of prescriptions. A couple of them were rather expensive. And so it was important to make sure that she got to the right prescription drug coverage and to the right health insurance plan to make sure her doctors would be paid for so she wouldn't have to cover it. And there's a process we take people through. I mean, there's a variety of companies out there. We don't actually try to, pigeonhole them into one company or another. We try to find the right company that suits their needs the best.
And Medicare planning is much like retirement planning in general. It's ever changing.
It is, yeah. The prescription drug plans are, I tell people, they're tweaked and adjusted every year. And if you're using something expensive or maybe a fistful of prescriptions, it's important to reevaluate that every year.
Gerald, with the estate planning, Gerald Eidelman with Eidelman Law Firm, how did the estate planning portion come into play?
Well, like Matt was saying, she came in with the idea that she needed a trust. A lot of people are told that. I mean, there's celebrities, there's financial advisors that keep driving the idea that a trust is the best vehicle possible to transfer assets outside of probate court. And yes, we want to avoid probate court, but we have certain other vehicles that can avoid probate court as well and don't require the expense and the management that a trust would. In her case, she did not need a trust. Most of her assets could pass through beneficiary designations. So we did that with her home. We had a transfer on death, so it would go to her kids. And we made sure that her accounts with Market Advisory Group were properly designated beneficiaries. And one of the things that we also did is realize that she is single now. She had no family in the area. And what happened to her if she had a medical emergency and she was incapacitated? Who would take care of her finances? Who would take care of her health? Before she was married, her husband would probably step in and be able to do that. But now she didn't. She needed to have a friend or some of the kids pitch in and be part of that response team, if you would, that would come into play when she needed it, when she was most at need.
Gerald, do you find a lot of people come in thinking they need one thing when in actuality it's something completely different they need to effectively plan for estate?
Well, sure. And that's because people hear a lot of things from different sources. Some of them that make people panic, some of them that make people confused. And so I have to take the time to educate them on what's appropriate for them.
At Market Advisory Group, we practice a holistic approach to retirement, from the financial advice to tax planning, Medicare guidance, and estate planning, and we do it all under one roof. If you would like to experience a holistic approach to retirement, or just have a second look at your nest egg, our operators are standing by right now to take your call at 316-252-8707. Again, 316-252-8707. We'll be back with more Eye on Retirement right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only. to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
Hi, and welcome back into Eye on Retirement. Matt Goolsby is managing partner and a lead financial advisor with Market Advisory Group. And Matt, in this edition, we've seen two instances, two scenarios where financial planning, retirement planning came to be right within the walls of Market Advisory Group. In one case, it was somebody concerned making sure that dependents would be taken care of in the event of their untimely passing. In another scenario, how divorce comes into play and the planning that goes with retirement planning after divorce. Two prime examples of how having the whole team under one roof was truly beneficial for the client.
We see it play out every day in these conference rooms, and it clicks with people. They say, oh my gosh, we never thought of that. And ultimately it comes down to, most of the time, the professionals they're working with are not collaborating with each other, they're not talking to each other, and they're maybe not even licensed to give the advice they really need in that moment. I met with a couple just the other day. They had recently retired, and their COBRA insurance was going to be up, but they also were not anywhere near the age of Medicare, so they were way too early to be talking with Medicare. But a big, call it talking point that they were concerned about was their income going to be under the Affordable Care Act limit, so they could get tax credits for their health insurance to kind of subsidize that. And their current advisor, they work with those advisors that are on every corner. I'm not going to say their name, but they were not getting any tax advice there. And they had $2 million saved as well in their IRAs or their 401ks. And they had Joshua actually prepare their taxes while they were in here. And they started sharing some of those frustrations with Joshua and his team about where their current investments were at, what they were not receiving in advice. What was some of that advice that they were not receiving?
Yeah, so in that situation, they were taking money out of their accounts, to cover regular living expenses, but then they didn't have the right level of withholdings because their investment advisor didn't know how to work through the process to figure out what that should be. So then when they filed their return, they were under withheld, so they had to pull money out of their retirement nest egg, which then increased their income for the following year. So then they were under withheld again, and the cycle just kept repeating, which was driving their income up, and they've got the ceiling they're worried about. They're trying to stay under that, and it was creating just a catch-22 for them, where their income kept going up, and they really just kind of felt out of control in the situation.
They were out of control.
Matt, what say you to somebody who has a financial advisor that's giving them tax advice?
Run. I mean, another story, Deb, who the investment advisor told her that her alimony was deductible. And that was causing all kinds of havoc with her Social Security taxation because of how much he was taking out of her investment account to supplement the income.
And it wasn't even required. Yeah, it was. That's rough. And that's just one of those situations where the investment advisor had good intentions, but the advice was outdated. Laws had changed, taxes changed, and because they're busy doing financial advising things, they're not going and keeping up with that tax education and are aware of how everything is changing almost all the time. It seems like
it's almost like malpractice because he was not licensed to give tax advice. He told her one thing, took a withdrawal from her account, caused all kinds of havoc, and now she came to us and saying, well, it just makes sense. Financial advisor working with the tax advisors.
Bill Vawter, Market Medicare Advisors, I would guess you have a list of stories of people who have come to you, because with Medicare, everybody's got advice. Everybody who's even thought about Medicare has had some kind of advice espoused upon them, and I'm guessing you have to clean up a few messes here and there.
Well, you know, today there are two different versions of Medicare that people have to pick from. And I'm always surprised because a lot of people will say, well, don't do this, don't go with that version, or don't go with that version. And their friend, whoever it was, had some reason for saying that. But then after we sit down and go through the process with them to explain what those two versions are, what they look like, then sometimes people scratch their head and say, well, why is my friend telling me not to use this version? And, you know, and I shrug my shoulders and say, I don't know. I said, but it's a choice that you need to make. It's your choice, not theirs.
Or the often one he hears is, well, my parents picked this plan, I'm just going to pick that one too. I mean, you hear that one all the time.
Yeah, I hear that all the time.
Gerald, Eidelman Law Firm, estate planning the same way. People come to you with all kinds of ideas that have been shared with them as well.
Oh, absolutely. I mean, everybody comes, you know, oh, so-and-so has a trust. That's one of the biggest ones I get. You know, everybody has been advised to have a trust. Or, you know, I don't need to have a will. I have everything just right set up. I mean, there's all these conceptions that friends, advisors, and other people have put into their heads, and then it's kind of working through out of that confusion and explain to them why these other options will work for them and will accomplish what they want.
Matt, time and time again, it's pretty easy to point out why it is so advantageous to have the whole team under one roof.
These guys actually make us better advisors because we can give complete advice in the moment when it comes up, when the question's asked. Either if they're not at the conference table, we can go down the hall and bring them in there, be around the same conference table, work together and collaborate. And oftentimes, you know, I learned in I think it's 5th grade science, when NASA gets one question answered, it opens it up to several others. That's what the benefit of this team here, because when we get those questions in the moment, then it often leads to a bigger conversation.
And all of these professionals for clients of Market Advisory Group come with one fee that's most times lower than what people are paying for just a financial advisor.
That's right. When I do a fee analysis on someone's, or a portfolio analysis on what the fees they're currently paying, if they're working with a professional, if it's not cheaper, it's oftentimes the same price and they're getting more for it.
If you'd like to explore the holistic approach to retirement with Market Advisory Group, our operators are standing by right now to provide you with a complimentary no-obligation consultation. The number to call is 316-252-8707. Again, that's 316-252-8707. If you've got a question you'd like to leave for us online, please do at ionretirement.com. We'll see you next time.
This broadcast is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or is excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. Legal services are offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Investment advisory services are offered through Foundations Investment Advisors LLC, an SEC registered investment advisor. This broadcast is copyrighted by Market Media Network. All rights reserved.